Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot prices of steel products strengthened. The domestic spot price of hot-rolled coils rose by 20 yuan ton this week, and the price of rebar increased by 50 yuan ton. At the macro level, Donald Trump recently completed the signing of a tariff agreement with Vietnam, setting the tariff rate at 20%, while imposing an additional 40% tariff on transshipped goods, which may have an indirect impact on China's exports. Recently, crude oil prices have fallen significantly, and inflation expectations have improved, leading the market to increase bets on the Federal Reserve's rate cut in September. Despite strong employment data, traders still maintain a more than 70% expectation of a Fed rate cut in September. Domestically, the Central Economic Work Conference mentioned anti-involution, and the market believes that supply disruptions in bulk commodities will be relatively significant, with strong long-term expectations. On the industrial front, the weekly output of the 5 major steel products continued to rise, increasing by 41,700 tons compared to last week, including a 32,400 ton increase in rebar output and a 9,000 ton increase in hot-rolled coil production. Currently, among the 5 major products, hot-rolled coils are under relatively greater pressure, but steel mills still enjoy good profit margins. The inventory accumulation rate of other products is lower than expected, and production volume will continue to be maintained in the following period. On the demand side, the weekly apparent demand remains resilient, with an average weekly increase of 54,100 tons. The decline in demand is lower than market expectations, and the resilience of demand is considered to have exceeded expectations. After the weather turned clear in East China and South China, the apparent demand for construction materials remained stable, making the demand perform well even in the off-season, and expectations have been further revised. In terms of inventory, despite the continuous increase in production, the 5 major steel products did not see inventory accumulation. This week, the destocking rate of factory inventories was equal to the accumulation rate of social inventories, so steel mills are under no pressure. In summary, as we enter July, a month focused on macro factors, sentiment is bullish for bulk commodities. However, fundamentally, steel demand is already in the off-season, with demand resilience exceeding expectations. In terms of profits, steel mills still enjoy good margins for the time being, with no significant pressure observed. Meanwhile, against the backdrop of high molten iron output, price support from the raw material side has returned, pushing up steel costs. Since the mainstream shipping schedules for export orders of some products are already at the end of August or even September, exports provide strong support for molten iron demand. It is necessary to pay attention to the inventory accumulation rate caused by the seasonal decline in domestic demand, and the impact of spot price increases on subsequent exports. Looking ahead, if demand for steel products remains resilient, steel prices may maintain a strong oscillating trend. For procurement, those with rigid demand can appropriately increase purchases and keep an eye on further changes in demand. From the institutional perspective, it is generally believed that supported by low valuation coupled with policy drivers, steel prices have risen slightly. Overseas macro markets are phased into rate cut trades, while domestic macro sentiment regarding the supply side has re-emerged, with the demand side waiting for the July 30th Political Bureau meeting. In the black commodity industry chain, steel demand during the off-season has exceeded expectations, steel inventories are relatively low, steel mills' profits have expanded, molten iron output has declined slowly, and the transmission of negative feedback has been sluggish. Going forward, further attention needs to be paid to domestic demand-side stimulus measures. To sum up, recently, steel prices have remained stable with a slightly strong oscillating trend, and price expectations have been revised. Among the varieties, billets are recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.